Disclaimer. This podcast is for FCA-authorised financial advisors only and is not for retail clients. The views expressed in this content and all other content on this channel are those of the individual speaking and do not constitute financial advice or a recommendation to invest in any product, asset or strategy, including those discussed in sponsored segments. This content is for educational purposes only. Always do your own research and consider all relevant risks before making any investment decisions.
A measured opinion, it was either all in or all out, which is difficult for me because that's not my nature. I actually think you're starting almost from like -10 because people are anti Bitcoin. I think people see it as a threat potentially. So the FCA have made it available within pensions, made it accessible to retail investors. You can hold these products, yet there's a stumbling block for advisors being able to advise on it. All of these things seem kind of crazy that they're opening the accessibility but closing the access to advice. That to me is mad. It allows you as an individual to explore things that you probably never even considered before in terms of types of currency, in terms of how the money supply moves around and how it can be manipulated and how it can be controlled. It's exciting because it will become boring. Like that's the future that I would personally like to see. If you dismiss, then you belittle your client, and that to me would be an absolute travesty for any client in our firm to feel belittled.
Morning, Dom. Welcome to the Bitcoin IFA podcast.
Morning. Pleasure to be here.
So, Dom, talk us through your Bitcoin journey. Everyone's against Bitcoin until they're for it. What's your story?
Mine's a story, I would say, of probably not wanting to miss out. I feel a little bit disappointed almost that I wasn't aware of Bitcoin earlier in my life, because it's the type of thing, you know, leaving university and in that age that really would have been of interest to me, and I would have loved to have hear about it, and probably would have jumped on something like that. Like that's just in my nature. But I started hearing about Bitcoin and being more involved with it around 10 years ago, I would say. Mostly, you know, as it goes through different cycles, you know, and as it gets more popular, just hearing from other people, seeing in social media or the press kind of what it was about and doing a bit more research. And like any type of investment or any new thing, doing the role we do as financial planners, kind of I like to try and educate myself as much as possible about the opportunities and the risks and all of those things. So I just used to do small investments into it, you know, kind of monthly pound cost averaging, and yeah, that allowed me to not just look at it from afar, but actually experience kind of the movements and the flow. And so that's where I am today, kind of just watching it and trying to learn and educate myself more and more each year as time goes on.
Okay, wow. So there's a couple of things I want to pick up on there. So it sounds like you had the FOMO, and the amount of times I find myself thinking, I think we're probably similar ages. I started my first proper job, career job, 7th of January 2008. And there was all this noise of recession, and like it just didn't mean anything to me back then. It was, you know, it was completely abstract. And I just think the money I wasted having fun in my mid-20s could have gone into Bitcoin. And yeah, if we'd have just, I think everyone who eventually gets into Bitcoin wishes they'd heard about it earlier.
I'd say so, but what I would say is you didn't waste that money. That was an education. That was enjoyable. You got to enjoy your life at the same time. So
true, actually, and I was always very good with pension. So I was always like, you know, retired Dan is doing pretty well because of the decisions he made in his early 20s. But yeah, it would have been nice to have been buying Bitcoin at less than $1.
Yeah, definitely. And I think you've been kind there, same with the same age, because I probably started my first job, proper job, more like 2004, maybe 2003. So thank you for that. That's a real, you know, it's a nice start to this this podcast.
You mentioned having skin in the game. And how important do you think that is for investing in Bitcoin for advisors that might be speaking to their clients about Bitcoin?
I think it's a personal mindset towards investing. So, at Beckett's, we run our own investment solutions and we invest in our own investment solutions. We believe in those investment solutions. And I think that's the same for me. That's a really important part of advising, is you understand what it is you're advising clients to put their money into. That's been my biggest driving factor, because during 2008, 2009, I was wet behind the ears in terms of kind of coming into financial planning and actually advising clients. And I inherited, books of business, a very, very small book of business, but it had all its money in UK property funds. And it was a real baptism of fire to go, whoa, like, this is crazy in terms of you can't get your money out, drop by 50%, and understanding what goes on behind investments then became absolutely paramount, which sounds obvious, but I don't necessarily think it is the most obvious thing to others who might not have experienced like investment trauma like those times. And that's flowed through into absolute return funds and all sorts of new nuanced investments that aren't necessarily good or bad, but are complex. And so Bitcoin to me was definitely one of those, because it's brand new, or was brand new. It was a new technology in terms of the blockchain. And I wanted to educate myself about it, how it works, how it how you buy and sell it, how you can get in and out, how you hold it, but then also how it moves. So you can have those conversations with clients who are interested in this space or who could benefit from it, and how they're going to feel and how they're going to need to be able to be resilient to different times. So yeah, I think I don't think it's essential for people, but I think it makes your story and your advice much more authentic and real when you've had skin in the game.
Yeah, I completely agree. I think it shows a lot of morals and integrity when you can speak to clients to invest in the same way that you invest. Mm-hmm. So we recently had Chris Clark on, who owns Advanced Wealth, and he's very honest with his clients. So he says, when they ask him, how do you invest? And he says, I invest 50% the way I tell you to invest, and I invest 50% in Bitcoin. But I can't talk to you about Bitcoin right now. Mm-hmm. So well, he couldn't then, can now.
Yeah.
They'll ask why, and then he'll give them. He has 3 books in his office. So he has the Bitcoin Standard, Bitcoin for 5-year-olds, I think it's called, and The Price of Tomorrow by Jeff Booth. And he'll give them to them for free and say, look, go and do the reading, come back and talk to me about Bitcoin if it's interesting to you. And actually, it was something that you mentioned there about educating yourself. So you spent some time educating yourself. What resources did you use for that? Where did you go to learn?
I'll be honest, all I did was go to the internet to see things on the internet and then try and find articles and websites and kind of people who I had respect for talk about the different topics. And I think it's such a polarizing thing, Bitcoin and cryptocurrency in general, that they very rarely felt like there was a measured opinion. It was either all in or all out, which is difficult for me because that's not my nature. Well, it's not my nature with regards to investment. So yeah, I think it was just a case of throwing myself into it. And what I focused on was less Bitcoin initially and more the blockchain and how does the actual technology behind the digital assets and digital currencies work, and then just being inquisitive and looking into all the different types of things that were coming out, from Bitcoin to then Ethereum to then kind of the other altcoins. And that's been quite an interesting journey on my side to kind of form more opinions about how comfortable I feel about different types of digital assets.
You mentioned a really good point there, which I think is Bitcoin was quite a young asset still 10 years ago when you first started finding it. And it was because of the way that it's been set up and the difference between, say, Austrian economics and classic Keynesian economists. People were quite polarizing about Bitcoin. They were either all in or not at all. And I think it's matured now to a point where we're starting to see institutional adoption. We've got BlackRock very publicly saying, a 2 to 4% allocation is great. I think JP Morgan came out and said that exactly the same just last week, saying a 4% allocation to Bitcoin is the right amount. And to my mind, for people getting off zero, that sounds about right as well. If you think that Bitcoin is a $2.5 trillion market cap, that's analogous pretty much to the Mag 7. If you go and have a look in your clients' equity portfolios, they've probably got somewhere between 0.5 to 4 to 5% in each of the Mag 7, depending on where they are in their life stage. And so just by, the nature of trying to be neutral, a sort of 2 to 4% allocation to Bitcoin, I think makes sense. Just this week, in fact, yesterday, as we record, we had the first ETNs or ETPs go live. I believe there were 4 providers: BlackRock, WisdomTree, 21 Shares, and Bitwise, I believe, all launched on the London Stock Exchange, meaning clients can now buy Bitcoin within tax wrappers, with or without their advisor's professional guidance. I would prefer that it was with their professional guidance. How have you and Beckett's prepared for that change, and what is it doing to your business, and what are the plans for that moving forward? Hi team, a quick interlude to ask, what if you could offer your clients Bitcoin exposure on a regulated investment platform? Because that's what my friends at P1 have done. They've created a discretionary model portfolio invested into companies with significant operations in digital assets, available within general investment accounts, ISAs, and pensions, and managed by award-winning investment professionals. With P1's digital assets portfolio, you can access a professionally managed portfolio of listed companies powering the digital asset economy, such as miners, blockchain infrastructure, payment services, and listed companies with Bitcoin treasury strategies. It's Bitcoin and digital asset exposure built for regulated advisors. It's diversified, actively managed, and with full transparency. P1 created the portfolio for advisors who see the long-term potential of Bitcoin and the digital asset economy, and who are starting to look at how best to facilitate exposure for their clients. It is packaged in a way that fits into an advisor's day-to-day investment advice process. So if you're an advisor who wants to offer digital asset exposure without the operational headaches, visit the URL in the show notes or use the QR code on screen. P1, bridging traditional finance and digital assets. Only available on the P1 platform and via regulated financial advisors. And the value of investments can fall as well as rise, and you may get back less than you originally invested. Now back to the show.
So I think the first, I know we keep harping back to education, but one of the first things that we did, and work for you, is we did your workshop. And for me, that was really important that we could educate all of the different planners about being able to talk about Bitcoin. I think when I look at Becketts as a firm, I'm probably one of the most, if not the most, experienced, just because of what we talked about earlier on today in terms of my involvement and my kind of educational piece around investing in it. But I wanted the different planners to have that exposure to understanding the asset, understanding how it behaves, talking through the pros and cons of it, and then also some of the logistics of how it might be able to form part of a client's investment strategy. Now, that's stage one in terms of having that across all planners, and it was brilliant because we came out on the other side with a much clearer way of talking about Bitcoin and about the blockchain, and less about all of the noise that can sit around the other assets in the space, and more about kind of the core asset, which we definitely believe is Bitcoin. You then have the regulatory changes, and you have the ability to be able to invest, through these vehicles, which I do think will be a massive factor, because one of the biggest difficulties was the logistics of owning Bitcoin as an individual, and whilst it's possible, I think the use of ETPs, ETMs, and maybe one day ETFs will be another step forward, because it just makes it easier for clients, and that's a major factor. For us as a business, because we do run portfolios and solutions, there are still difficulties and roadblocks in being able to allocate, for example, 1, 2, 3, 4, 10% to a portfolio in a kind of natural, call it centralized investment proposition structure, just because of some of the additional regulatory roadblocks and the platforms in terms of their ability to be able to offer it. I imagine this will continue to be a fast moving space, but for us, it's trying to be at the forefront of, if our clients want to discuss this, if we want to bring this in as an investment option, let's not wait. Let's be available to do that, and let's make sure that we can do that in the safest regulatory way for our clients, and in the most informed or advised position. I do believe with any investment asset, you're better off having a professional who understands it advising you. And I think when you have an asset as new and nuanced as Bitcoin, that's even more true. So, understanding the volatility, the risks, but the benefits as well, and how you should hold this, how an advised position is going to be essential. So we want to be at the front of that as much as possible.
Well, you touched on a few things there. Firstly, thank you for the high praise on the workshop. We've worked on that a great deal to try and make it as informative as possible for advisors. We appreciate that the majority of advisors are essentially coming from zero. So we've tried to basically condense down everything that you need into a 2-hour presentation. It's the only education that you'll really need to be able to advise on Bitcoin. So thank you for that. And then I think you're absolutely correct that education is key for advisors in this space. As I mentioned, that a vast majority are coming from zero. There's a lot of preconceptions, a lot of misconceptions, courtesy of the mainstream media and headlines over the last 10 to 15 years. And you also touched on, I think you're absolutely correct in that we have to meet clients where they are. So ETNs, ETPs, ETFs at some point in the future. Buying Bitcoin on chain can be quite tricky for some people. I know it's available within the likes of Revolut and PayPal, but realistically, once you're getting up to whatever that figure looks like for an individual, holding that on your phone is just a risk, right? So then you have to start getting into cold wallets and all of that stuff. And, I find that stuff super interesting, but I've made mistakes doing that. And there's, I like to think, I always use the gauge of my mum. There's no way my mum could buy Bitcoin on chain. So we have to be able to meet them where they are. And for the majority, certainly of your clients, that's going to be you discussing, coaching, educating, and then executing on their behalf. So you mentioned a couple of challenges there to be able to execute on their behalf. So in terms of building your investment thesis and platforms, so can you go into a bit more detail there in terms of what those challenges are?
Yeah, and just going back to your workshop, I think you were talking about educating people from point zero. I actually think you're starting almost from like -10, because people are anti you know, Bitcoin. I think people see it as a threat, potentially, advisors, whereas you have to see this as an opportunity. You have to see this as a way to help your clients. That's how we broached it. There are definitely some minuses, I would say, in the room, but post the workshop, everybody felt more informed. Whether they have biases either way, you know, we've got 10 planners here, so we've all got our own biases on all sorts of different things. So it's about acknowledging those, understanding those, and then being able to talk openly and ideally without bias, but at least having a measured conversation about this rather than blocking it off. The workshop gave us that 100% and more, and actually allowed quite strong commitments to certain things from different planners and from us as a business that allowed us to talk as a business, like almost like, okay, how are we going to form our business for you? So then from that feeds into your next question about the difficulties. I think I'm pretty sure there's still a non-mainstream regulated investment. I can't remember exactly what it is.
It's a restricted mass market investment is the classification.
In that, we love in financial services, so I don't know what it is, but whatever that acronym is, that seems to be the current blocker for a number of platforms in being able to bring the ETP, ETNs into play. I would say where Becketts are coming at this, where we're coming from now is we're exploring that. We're exploring the regulatory change. We're exploring how that sits for us in terms of a business risk. With the likes of 360, which is our compliance, with our compliance officer in the business, to say, well, where do we stand in terms of talking about this? Where do we stand in terms of being able to implement this? Because we do get demand and we do get questions from clients. Not every single client is coming in knocking on our door to try and invest in Bitcoin, but they definitely want to have discussions about it more and more. And that's a sign that you need to be able to have those conversations and also be able to do it in a safe way for the client. So we probably see our position right now as our core investment solution, our core portfolios are unlikely today to be able to implement an allocation towards Bitcoin. This is something that I've been looking at for, I want to say, maybe 5 years or so. There was the first discussions of the ETFs being available in the US, and I know they've not been around forever, but there was the futures Bitcoin that you could purchase, versus the spot price. And I never want to hold on futures. If I could, I want to hold a spot price, basically. But as soon as that became available, it was a discussion that we wanted to have within our investment committee to say, does this sit? Does it fit? Is there benefit to our clients? And ultimately, it then was just a non-starter. But where we are today, that ability is getting closer and closer. And I think that's where we are. It's going to be, for those who it's suitable for, and for when we can do it with confidence in a regulatory position, we see it start as being a satellite approach. So core investment solution with satellite holdings. Longer term, we will want to have more discussions. I can't say it all because I'm in the investment committee, but I don't make all the decisions of the investment committee. But let's say there will be at least a voice or a couple of voices, because we've got some very different views and measured views in the committee. But there'll be a couple of voices that will be continually talking about this and saying, well, does it form? Can we manage? How will it affect the overall volatility of a portfolio? And I know volatility is only one measure of risk, but it is a measure of risk for us to be able to look at the allocation across risk grades and the different factors there. So more and more discussions. You would like to have thought that the FCA's change and stance would be the silver bullet that allows us to now, okay, we can go out and advise on this. It doesn't feel like we're there yet. It feels like there's still a number of hurdles in the way.
And that's, Super interesting. Thank you. Yeah, that the restricted mass market investment classification, I think, is a stumbling block for some. But I'm going to give away a little bit of my IP here, Dom. But there is nothing stopping a DFM or an MPS provider from building it into their portfolio or their fund and acting in a professional investor agent client relationship with the advice firm. That should also mitigate any PII. Is it PII? Professional Indemnity Insurance, I think. Oh, yeah. Because that will then fall on the DFM or the MPS provider. So I think there is some grey areas that are still, I guess the word is scary for advisors, because there's uncertainty. And I think what's likely to happen is we will see some first movers. But so as part of the ban being lifted, HMRC have confirmed that Bitcoin can be held within DC and DB pension schemes. So I know that that was shared on LinkedIn by my friend Sam Roberts, and he's the investment manager for Cartwright. They put Bitcoin into a pension, about a year ago now, I think, just over a year ago. So it's already happened. HMRC have lifted the ban and confirmed, the FCA have lifted the ban. HMRC have confirmed it is allowed, but because of the fear of the FCA and any damage and the headlines around Bitcoin, and I think it's going to be a slow uptake, and it's super interesting with something like Bitcoin, because I think the name creates the bias. You mentioned the bias, and we're going to come back to that in a second. But if you removed the name Bitcoin from Bitcoin's performance and called it the Vanguard Super Accelerative Growth Fund, everyone would be piling into it. They would accept some of that volatility and be like, yeah, no problem. We'll put 5% of your portfolio into this thing because it's the Vanguard Super Growth Fund and it's doing 60% CAGR for the last 5 years.
I'll challenge you on that. We wouldn't at Becketts, because we'd be going, what's underneath that? What's behind? What's driving this growth? Because that might look too good. And the problem is Bitcoin would almost look too good to be true at that point in time when you're tracking it through. But I know what you're saying, that those biases do come in. What I thought was really interesting before and is the FCA stance. So the FCA have made it available within pensions, made it accessible to retail investors. You can hold these products, yet there's a stumbling block for advisors being able to advise on it. It seems so counterintuitive that where, what I believe the FCA should see advisors as is the safety net, is that kind of second opinion, that real clear mind to go, well, it should be a 4% allocation, not a leveraged 3x Bitcoin move, which we'll probably see in the next few years, and people not even understanding how they will be, they have to revalue the debt each night and say, well, you get the return of a 3x. So all of these things seem kind of crazy, that they're opening the accessibility but closing the access to advice. That to me is mad.
Yeah. Although it's not that surprising given the sort of patchwork that we've had over the last few years of access to Bitcoin. So, it's never been banned. You can buy it on chain. But then, you can buy MicroStrategy, which is a 1.5x leverage of Bitcoin. Bitcoin's already, so the S&P is vol 15 roughly. Bitcoin is vol 60, which makes MicroStrategy like vol 100 or vol 90, I think. And you can buy, do not buy this unless you know what you're doing, right? Seriously, repeating my disclaimer here, this is not financial advice. But retail have been able to access a 3x leverage of MicroStrategy ETF. I've bought it. It's bonkers, right? So this MicroStrategy is already 1.5x vol of Bitcoin. And then you can buy something that is 3x that. So it's 4.5 times the volatility of Bitcoin and hundreds of times the volatility of the S&P. So, but we have been able to buy that. Then obviously we had Smarter Web launch in the UK in April. And I've heard rumors that one of the reasons why the FCA have accelerated this, because that we are expecting full consultation in 2026, so a lot more clarity at some point in 2026. But one of the reasons that the FCA have brought this forward, lifting their self-imposed ban, was because of companies like Smartaware, BHODL now. I think there's another one coming. So when there is access to Bitcoin, not only through MicroStrategy, but on the London, on Aquis, but on a London UK-based stock exchange, the FCA, I believe, had to sort of accelerate their roadmap. But the bias thing is something that I really wanted to come back to, and I've actually, since you've seen the workshop, I've added a slide on bias on, one of the in the debunking section, if you remember that section. So I've added it in there about, I don't like it. Yeah. But as advisors, we don't get to advise based on our bias. We have to advise based on data and facts. And Bitcoin is the single best performing asset of the last 16 years. A 0% allocation is essentially gambling that trend is going to reverse and say, right, stocks and bonds are going to outperform Bitcoin for the first time. So, and also pick whatever your thing is that you're against, right? If it's alcohol, if it's weapons, if it's negative ESG, whatever it is, more than likely your clients have access to that within there. If you've got a global equity portfolio, you are probably buying things that is against your own personal bias, because that's the job, right? That's the diversification job. No one can predict the future. We buy everything. We buy all of the equities, not just the Mag 7, because we have no idea what's going to happen in future. And so, yeah, we don't get to dictate our clients' investment thesis based on our own bias. And I think there is still quite a lot of bias against Bitcoin, not just within the advisor community. I think in the wider trade press, in mainstream media. And I think it is because it is seen as this threat to the hegemony of central banking, the way that we've created our fiat system.
Mm-hmm. Well, I think that's probably one of the most interesting conversations that Bitcoin's brought. And I know what your last question is going to be, and this links to this in my mind. But I think it does allow. It allows you as an individual to explore things that you probably have never even considered before, in terms of types of currency, in terms of how the money supply moves around, and how it can be manipulated, and how it can be controlled. And a lot of these things are tied back to classic economics in terms of how we look at supply and demand of money, inflation, interest rates. All of these things are who controls them. But actually, the creation of Bitcoin is something that I've enjoyed. Like, I quite like thinking about these things, and I like, almost mentally exploring for myself, like scenarios of what if this, what if that. And I think that's what Bitcoin has given to me. Has this ability to maybe challenge certain norms more than I have in the past, and see different futures. And that's exciting and scary at the same time. So yeah, I think that's definitely a attractive thing for me as an individual. What I will say is, I know other clients who react really badly to that. Fear, opportunity doesn't necessarily come to their mindset. Fear comes to their mindset, and almost like, well, because if you look at the normal distribution curve and you look at the absolute extremes and the absolute 0.1 or 1% chance, or 0.001% chances on the negative of what could happen, they're pretty awful scenarios, and some clients can then fixate on those. The same as on the other side, like the opportunities and the theories and the promises that some of, I'm not going to say Bitcoin, but some of the other cryptocurrencies kind of make, people fixate on those. And then suddenly that causes a different risk on the other side, because they can be leveraged to their hilt on an asset that they truly believe, because of what they've seen out there, is going to, create unbelievable changes in how we use money in the simplest sense. But actually the risk of that is enormous for them personally. So, if you're in the middle, it's kind of fine. But if you can be either ends, it can cause real risk.
Yeah, completely agree. I like the way that you've explained potentially seeing different futures. And I think that's one of the reasons to include Bitcoin as a hedge. Again, even if it's just a 2 to 4% allocation, something like that. Because if governments are going to attempt to repay the debt that they currently own, there's really only two ways to do that, which is to default. They're not going to do that, or they're going to print. They're going to print and nominally pay it back. So they'll, devalue the currency essentially to then devalue the debt. But because of Bitcoin's finite nature, it should rise in value when the denominator is fiat currency. And that's the hedge, right? And I'd never thought of that. You've just opened my eyes to trying to explain that to clients can easily generate a lot of fear. So yeah, how would you, so if you bring up, I'm literally just spitballing off my head here, but if you bring up Bitcoin as a hedge, and they're going to ask a hedge against what? And I would imagine the simplest way to explain that would be an inflationary environment.
Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, chances are your clients have already asked you about Bitcoin. And if they haven't, they soon will. Which is why I've created the Bitcoin IFA webinars. The webinars are designed to give you all of the information you need to confidently talk about Bitcoin with your clients. They're on demand, so you can watch them at a time that's suitable for you. They count as 90-minute structured CPD, and you'll get priority access to the Bitcoin IFA community. Head over to the bitcoinifa.com to book your webinar today. It takes less than 60 seconds. Again, that's the bitcoinifa.com to book. Now, back to the episode.
Yeah, and I think you can position it that way. I think it's smart. We're talking investments now, aren't we? And I'm going to also caveat, this is not investment advice. I hate that word. It is not investment advice. This is it's two people talking about, the future. And I think the idea, when you said in the workshop, not holding it is a bet against it, continuing to produce a return. I thought that was a good way of positioning it. And I also think small allocations provide that hedge, and a rebalancing also provides that risk mitigation as well. Now, even though the historic numbers go against that, I think it's difficult for me, definitely, to use historic numbers to forecast the future. We don't do that as much as we possibly can with our equity investments. We shouldn't do that, in my view, with Bitcoin, because the future of Bitcoin is going to be completely different to the past of Bitcoin. But the finite nature of it, the potential change, the use case change, we've seen, obviously, I don't know when this will go out, but we're mid to end of October now. We've seen a reduction in the attractiveness and confidence in the US, in the dollar, and this, given a balanced opinion, I thought, well, maybe this is a time for Bitcoin where the assets will move over. They look like they've moved more towards gold. They definitely move more towards gold right now. However, even though Bitcoin's been volatile in this space, it's not been huge. It had a couple of bad days and this, that, the other, but then seems to creep back again. So it is whether that use case transitions and becomes more solid in my mind, becomes adopted, becomes the digital gold, that kind of mindset towards it. That's my personal view of the longer term best use case. And gold is volatile. Gold can go all over the place and have different times because it's generally a risk-off asset. I don't yet see Bitcoin as a risk-off asset, but I do see that being a future transition of where it could be. And then you start talking about, well, that's definitely an opportunity within portfolios to have that hedge, to have that risk-off hedge. For us as kind of the investment managers at Beckett, these are discussions we have all the time about, what risk-off assets do we want to hold in there? I think what's changed over the last few years is we've probably touched on Bitcoin more and more. We've said on this earlier that now the availability is there. Like, we run our assets on a discretionary basis, so we have the ability to hold these assets. Again, logistically within a portfolio, it's still not as easy because you throw an ETP or an ETN in there versus like an open-ended collective investment, and there are different difficulties with fractional holding, monthly investments going in, trading costs being balanced out. So it depends on your platform. But the discussions are being had more and more about Bitcoin, and I would say at the moment we're still discussing it as it could be a risk-off asset, but it still feels more like a risk-on asset. And I hope, because I would like another store of wealth that isn't, gold, that isn't US treasuries. So if we did have Bitcoin more towards that to me would be really attractive, because it feels almost more controllable as well. Non-controllable, that's not even a thing, I don't think, but like it feels safer, which is not, we know how it should react. We know the amount that's there. We know the path of Bitcoin is set out for itself. So it's just going to be supply and demand that kind of manage that. And if we can get a stabilized supply demand process, then it can become an asset that we can rely on. That's what's really exciting to me. And what's funny is it's exciting because it will become boring. Like that's the future that I would personally like to see, because then it would be even more useful. Whereas at the moment, it still feels like greed and accumulation and asset growth is the driver for the buyers themselves.
Yeah, I would completely agree with that. People are still seeing Bitcoin as this get rich quick investment, essentially, whereas we should be looking at it as a 15, 20 year hold and see what happens. It's interesting you mentioned use cases, because I think the more adoption we see it as a unit of exchange should increase the use of it, and then therefore increase the value of it. And I mean, even just in the last week or two, I saw that, I forget the number, I think it's either 350, 450 or 650,000, but it's hundreds of thousands of vendors in South Africa just switched on to accept Bitcoin as a payment.
Because you're more educated than me about this, and much more educated than me about this, but as I understand it, as a unit of exchange, it has positives, in terms of its finite nature, and down the line we should see, we have been seeing reductions in volatility of it. So, it needs to become more stable to be able to be a unit of exchange. But are there not just the technology doesn't seem behind the technology of Bitcoin doesn't seem to lend itself as well to a currency, like a unit of exchange? Or am I mixing up currency and unit of exchange there as two different things?
I think you're correct in that. So my understanding of the blockchain, so Bitcoin was the first blockchain. The technology of blockchain has been improved upon. So in terms of volume of transactions per second, that kind of thing have been improved upon. Where I think we'll end up getting to is Bitcoin has what's now called the Lightning Network, and that essentially settles small remittances immediately. And then within the block, so each new block of 10 minutes, that's when the sort of overall remittance gets sorted out. So where I think we'll end up is something like the Lightning Network will take care of small day-to-day transactions. And then in the same way that we have the clearing overnight, so like, Barclays and NatWest just send each other money all day, and then they clear it and remit it overnight to figure out how much they actually owe each other. And I think that's the sort of system we'll end up upon. I think you're correct in terms of, for it to truly be adopted as a currency, then even the intraday volatility of, I think Bitcoin's daily vol is sort of 1 to 2%, but that's way too much. If if I'm going to buy a house off you for £500,000, I can't have that go down by 1% or up by 1%, right? Because there's always going to be a winner or a loser in that trade. But it will, it will get there. That may take decades. And in that time, we will see, I believe, large accretive increases in the value of each Bitcoin and each sat compared to fiat currency. And also, it's only because we're denominating it in fiat currency that we see that volatility. There's a famous saying in the Bitcoin community that 1 Bitcoin equals 1 Bitcoin. So, there will be, I believe, some people that move to a Bitcoin standard before governments themselves move to a Bitcoin standard, let's say, before the world does. And at that point, then you would just, if you're speaking to another Bitcoiner, you would just establish the value between yourselves in Bitcoin. You would just say, I believe that house is worth 1 Bitcoin and I'll send you 1 Bitcoin. You just agree. It doesn't matter what it's worth in fiat. But we're probably still some way away from that. And I believe that Bitcoin will move to much higher numbers when denominated in fiat terms. Until then, or before then. Becketts are obviously, you guys are a large, well-known player in the Northwest. How would you say Bitcoin, or would you say that Bitcoin offers a diversification for Becketts versus advisors who may be slower to react, slower to educate themselves, and potentially against, say, the wave of consolidation and PE, private equity money coming into the profession?
Hey team, just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
I can't say we do this with a mindset of competitive advantage. Now, I think that is potentially a knock-on effect. But I think, as with everything we do, the goal is to give the best, most well-rounded, accurate advice to our clients. And so, with a regulatory change coming in and the availability of a new investment that is one of the most, I can't think of any other investments that have been talked about as much as Bitcoin and cryptocurrency over the last 10 years. The amount that, probably coming back from a party in a cab, and the cab driver's like, we do wealth management. What about Bitcoin? Kind of, they're not going, we do wealth management. What about kind of a balanced 60-40 portfolio? Like, that just doesn't happen, does it? So it's a very interesting topic for people. And I think as that regulatory change came in, our goal is to be at the forefront of anything in the investment space, in the financial planning world. Now, having that and exploring that, I think, does therefore make you more relevant, maybe, to hopefully all investors who have any interest in this space. And even for some of our existing investors who then want to talk about it, we're lucky we've got a brilliant client bank, awesome clients who are engaged in the investments that we run for them, and are smart, educated people who are looking for opportunities. And so now the whole team have the ability to have these discussions, and that inevitably is a better service than I don't like Bitcoin or I'm not talking about it to you. So I think just our natural inquisitive nature, our natural focus on being educated about what we talk about, lends us to looking at things more and more, discussing things, just having open conversations with people, and that then lends us into having better conversations with our clients. So will let's take a significant consolidator style entity, would they be able to move as quickly and as nimbly as we can? Like, no, because without you do have to, in some ways, manage the lowest common denominator in your firms to mitigate the risk of your firm. And advising in this space is a risk. There's no doubt about it. Like, it is, in the FCA's eyes, not in yours, I know, but in the FCA's eyes, a high risk investment. Like, based on its volatility and even though it's established based on its kind of newness to investors, it is a high risk investment. And so if people are talking about it, you need to be well regulated and well protected as a firm. So at our size, and I believe, even larger than us, we don't see ourselves as a large firm. I think we could double in size if we retain the quality of the people, we retain our education piece. You could still have a very well regulated discussion around this topic. It's a moving piece of legislation, and so we are far from just talking about it like other funds, let's say, like normal, but like investments that we've been talking about for the last 20 years. But we want to be at the front of them.
No, that makes sense, and thank you. I think you're absolutely correct. You touched on something there about being able to have that conversation with your clients, and I think there could be nothing worse for a client who shows emotional involvement in their own investments and comes in to speak to their advisor and says, I want to talk to you about this Bitcoin thing. An advisor just dismisses it out of hand, not talking to you about it, not interested. It's whatever their excuse was. It's unregulated. It's a Ponzi scheme. It's tulip mania. Pick your headline that you want to talk about it. If you start to just dismiss clients who are showing emotional involvement and want to feel involved, then I believe they will start to lose those clients. But they'll certainly become disengaged. And my personal opinion is that within 3 to 5 years, the advice firms who are not necessarily recommending Bitcoin, but certainly talking about it and able to have open and honest discussions about it, and then especially if they do recommend it, in my opinion, they will start to win clients, assets, and staff from the firms that take a very anti-Bitcoin stance because of the performance of their funds. And my inbox is full of young IFAs who want to come and work for the Bitcoin IFA. I'm not an IFA. I do not have a firm. But they want to work for firms that are talking about this new asset because they're in their 20s or their early 30s. This is their asset. This is their generation's asset. This is their generation's NASDAQ, right? The NASDAQ was launched in 1971. I would imagine the 20-year-olds at the time wanted to talk about this new tech ETF, and the 60-year-olds at the time were like, don't want to touch it, not interested.
Yeah. I think for me, kind of the most important part of that is the word dismissed that you said. I think that's a key part to a financial planner's role, and it's to It's to hear what the client is saying, irrelevant of, there's been many things said across this table here that I know are wrong, I'm trying to think of the word like fantastical is probably not a word, but just kind of crazy. Like, you've heard it in the pub or you've read some crazy article, but what the job of the planner is to do is to hear the client, is to let them speak about this fear that they've got or this opportunity that they've got, and then to give high quality advice back. If you dismiss, then you belittle your client, and that to me would be an absolute travesty for any client in our firm to feel belittled by their planner. And it's that it goes back to your biases, but it's that position that you have of trust and authority in many cases that they're coming to you to talk these things through. So you have to be able to have the conversation about it, and and touch wood, I believe all our team can.
I'm glad to hear that. After our training, hopefully.
Yeah.
If I asked you to make some predictions on where you believe things might go in the next 6 to 12 months, how comfortable do you feel doing that?
Completely uncomfortable and unqualified over 6 to 12 month period. So there is my answer, straight no. But what I would say is it harks back to my belief of the best use case for Bitcoin, and I think this is a 5, 10, 15, 20-year journey. We're not talking about like a localized thing. This is global. This is adoption, and in my mind, I'm not set that this is guaranteed in any way. This could go to zero, which I know you would disagree, and lots of people who believe differently to me would disagree. I think that is a very low probability. I'm not saying that that's going to happen. I think that's a super low probability. I think a much higher probability is that it does become adopted more widely globally, and therefore the value is going to increase and stabilize. So that's my personal belief, like my opinions, not advice, is that I believe this will be a long-term store of wealth that will complement other stores of wealth, and that will give us a more balanced way to hold assets in the portfolio. So that's my hope as well as my belief, but I think that is a long-term bet, and I would never predict anything over a 12 month period.
But do you feel that regulation will become more favourable over the next, say, 6 to 12 month period?
I would say I hope so. Again, I actually think we've got one of the best regulators in the world in the FCA, and I think that the confidence that people can have in regulated advice, in regulated investments and assets is much greater. We're exploring lots of different international opportunities now in terms of giving advice in different jurisdictions through different partnerships and stuff. And I look and speak to some of the firms that operate in those areas, and the regulation is shocking, like gives zero protection. So the FCA, in my view, are actually excellent. I would not like to do their job, but they are also, it's also hard for them to maneuver and be nimble. And so I think the steps that we're seeing in terms of availability and it becoming more regulated are more positive. I would like to see increased availability for regulated advisors to give retail investors advice in this space, and therefore, if that happens, an enhanced range of investment options to use to be able to do this. The thing that worries me a little bit is And I think, you and me generally agree on this, kind of the asset that we're talking about is Bitcoin, not Doge or range of the other altcoins. And my fear is that, you allow a Bitcoin ETF, and therefore you can get like a Trump coin ETF, and that to me would be more dangerous, and so I'm a bit nervous. I don't know the answers to these things, but like I say, I'm glad it's the FCA to deal with this. But would I like multiple ways to be able to hold Bitcoin within a portfolio? Open-ended collectives, closed-ended, the different ET versions. All of these, I think, would be positive if they can come through regulated advice, because then the clients will get hopefully an educated and well-rounded advice piece on how to hold these assets.
It's a great answer. And I mean, ultimately, the goal is to have on-chain, right? If an advisor can hold on-chain within a SIP and an ISA, I think that's the ultimate self-sovereign goal, that you can say, look, 10% of your SIP and 10% of your ISA or whatever it is held in cold storage, unconfiscatable. If the government come for unrealized gains, you are the one that's got to sign off that Bitcoin moving or whatever. So I think that's the ultimate goal, but that's a great answer. Thank you, Dom. Right, we always ask the same last question to everyone. So what's one positive thing that Bitcoin has brought to your life outside of number go up?
Well, I think the answer that we touched on earlier is the answer that I would give here, which is my scope of thought, I think, has been enhanced by blockchain and Bitcoin, and the technology, and how can that technology be implemented, not just in the space that we're talking about in terms of Bitcoin, but where else. Contracts is an obvious one in terms of transactions. We've got a house. I used to look after an elderly gentleman who's passed away, and we're going through all of his probate stuff now, and this whole process is painful. And his name was Tom. Loved Tom to bits, but you then think about having to do this for parents, and things like that. And I think the actual technology options that could come from a wider use of this are huge, and the ability for Bitcoin and that to make me think about different ways the future could look, with, let's say, Bitcoin truly adopted globally, and where would that mean in terms of control for governments, and the opportunities for the unbanked, and ones that we've talked about in the past. Like that, to me, feels like there's the potential for a fairer society, and all of these things are thoughts that have been triggered from this new technology and this new thing. So for me, it's been really enjoyable to just mentally explore different futures. So it's given me that, and it's given me a good return in the period that I've been invested in it as well. So you've got to touch on that.
Great answer. Thank you, Dom. Thank you for joining us today.
Loved it. Appreciate it. Thank you.